Hello traders, welcome back to Trading Life Masters. This is Zicheng here, one of the lecturers in Trading.life. In this video, I'll be sharing a simple 3 exponential moving average strategy that you can try by yourself. Before we start, I hope you can first press the like button, share it with your friends, and lastly, subscribe. Let's get started. Right here, we have our Euro USD 4-hour chart. So since today's strategy, we are going to talk about the EMA. So I'm going to teach you how to apply the EMA first and what are the settings. So this is trading view, but if you are using MT4 or MT5, that could be another application. So if you're using trading view, follow my steps on applying those EMA. Firstly, head over to indicators, type in 3 EMA. So under 3 EMA, you're going to see lots of EMA. But we are just going to use this 3 moving average exponential by Jess Pele 237. But of course there are some extra or other choices. You can choose them by yourself, but as long as you have 3 EMAs on your charts, you are good to go. So since there are so many options, I'm just going to choose this. Looks simple. Now follow me, click the gear button. So you can see the EMA is prepared over here. Click the gear button, change it to, this one will be 200, 100 and 50. And of course you can change the color to your wish. You can change the thickness of it. So we are going to make it slightly thicker and we are going to click OK. So we can see the pink one is the 50 EMA, the orange one is the 100, and the 200 is the blue EMA. So what can we understand from these 3 EMAs? We can see there are 3 lines. So in order to find out what trend is it and if it's strong or weak, we want to see that these lines, they have a very good gap from each other. So in this case, we can see that they are very separated from each other. This means it's a very strong downtrend. And if it's a consolidation phase, we can see it's going to be like this, where the lines are super close to each other. So let me repeat once again. If the lines are very close to each other, it means that it's in a consolidation phase. And what about the uptrend? So uptrend will be something like this. We can see that the colors have switched. Previously, if it's a downtrend, the pink will be the last, which is the bottom. But if it's an uptrend, you will see the pink on top, followed by the orange, and followed by the blue. And we can see there's a very good gap in between after it has come out, after it has broken out of the consolidation phase. It is trending up very, very strongly. So how do we use these EMAs to trade? Since we have 3 lines, which one should we take entry? We are going to look for entries at the 100 EMA, which is the middle line. If the price decides to come back here, we are going to wait for some bearish engulfing or some bearish candlestick patterns. So this is very important to know about the candlestick reversal patterns as well. You cannot just solely wait for price. Once it touches the 50 EMA, you proceed, this is the 100 EMA, you proceed to take the sell. This is not the right way. You need some proper candlestick confirmation as well. But what if price decides to cross back up to the 200? We will stay put and wait for confirmation. We will not take any entries if we spot anything at the 200 EMA. We are only going to find for entries around the 100 EMA. For example, in this case, we have a downtrend and price is retracing back up to the 100 EMA, and we got a bearish engulfing. So we are going to take a sell here. We're going to place our stop loss above, have at least a 1 to 2 risk to reward, so it will be a running trade. It has not taken profit yet. Let's look at more examples. So let's see more examples. So in this case, we will not take the trade is because it's not a bullish engulfing. So for example, this one is a good choice. We can see price is a downtrend, retraces back up to around 100 EMA, and we got a bearish engulfing. So we're going to look for sells here. Place a stop loss below here. You get about a 1 to 2 risk to reward before it reverses back to the upside. Let's look for more examples. So we got a very good uptrend. Look here, we got a very good uptrend. Price came back down to the 100 EMA and we got a pin bar which is a sign of reversal, then you can look for buys, place your stop loss below, have a 1 to 2 risk to reward, and you get your profit over here. Right, get your profit over here. Let's look for more examples. So remember, do not look for any trades if the lines are very close to each other, because it's more like in a consolidation phase. So for example, right here we have a very nice uptrend. Gaps are very huge between the lines. We can see now it has retraced back to the 100 EMA, and we got a bullish engulfing here. So we're going to look for buys here, and we are going to target a 1 to 2 risk to reward, and we get TP hit over here. Let's look at one last example. So we have this one, but this one I would say it is not around the 100 EMA, so we wouldn't take it. And now we will not look for any entries here because the lines are very close to each other. So we have a very nice downtrend here. Let's see if there's any entry. Not really. So look, the 100 and the 50 is very close to each other, so we will not look for any entries here. Now we got a strong downtrend, but the price did not retest here. Let's look at another pair. For example, GBP USD. Let's see if there's any chance for us to find for some good examples. Now, a little trick over here. Whenever we are looking at a higher time frame, it's going to give us lesser opportunities to enter, because it's a bigger time frame, it needs more candlestick to form. So if you really want more opportunities, you need to go down to a lower time frame. So this one is a good one. We can see a very nice uptrend. The lines are very wide from each other, and we have a bullish engulfing after touching the 100 EMA. We're going to look for buys here, place a stop loss below, and have a 1 to 2 reward over here, and we got a TP hit. But remember this strategy does not have a 100% win rate, so remember to place a stop loss, have a good risk management, risk according to how much you're willing to lose, and as well as have more confirmations. For example, learn up some candlestick pattern confirmations, learn up buying at key zone. Those are very important. Here comes to an end of this video. I hope you have fully understood how to use this strategy. If you still have any doubts, feel free to comment down below and I'll try my best to answer them. I have daily live streams at trading.live on every weekday. If you are interested to join, feel free to hop on and join me there. Once again, I hope you have liked, shared and subscribed. Thanks for watching and see you in the next video. Trade safe.